I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like the service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon, welcome to GrainTV. It's January 22nd, 2014. I'm Logan Burgess, and my right here is Cody Bills to help break down a very quiet Wednesday in the grain market, much different than what we saw yesterday. Let's jump into the quotes here and see where the grains closed out the trade session. Corn was up 1.25 pennies, soybeans off 1 penny, Chicago wheat down 1 penny, and we had Kansas City wheat trading up 3.5 cents, showing a little bit of relative strength there. One thing that was helping out the hard red winter wheat contract was a good export sale reported to the Iraqis. 50,000 metric tons there, so you combine that sale with some of the cold weather that we've been talking about here recently, and that seemed to be supporting Kansas City wheat a bit. You know, Cody, this cold weather phenomenon is something that's been getting a lot of attention in the trade. How exactly is that affecting the corn and soybean market?
Well, it's doing a couple things. One, I think it's supporting soybeans in the fact that the cold weather, I think, is causing expectation that cattle are going to burn more energy, and as a result has been able to support the meal market a little bit. That, I think, was kind of prevalent in the soybean trade today. Yeah. We were able to get down below the 200-day moving average, but couldn't close down there for soybeans on that March contract. We ended up closing above that 200-day moving average. I think that's going to continue to be a support level for the days moving forward. The other way that this cold weather is affecting the market, well, is it's slowing down the cash market movement, and that's going to help support basis, but also it's supporting the wheat market. Now, it's not adding a premium to the wheat market so much as it's slowing the decline, the rate of decline that we've seen in wheat prices. The fact that we have about 15% of the SRW region that could be impacted by this cold weather, I think, has slowed the rate of decline for soybeans. Now, Logan, if we look at this daily chart for this Chicago wheat contract, you can see that we are trading only about 1 penny and a bit off of the lows set on the 10th. Do you suspect that we'll be able to go through those lows here in the coming days? You know, I really think that they are going to be tested. As you said, in the last couple of days, this market's been supported by the very big cold front that's moving down from the north. And I think once this cold front is kind of behind us, temperatures are expected to warm up here over the next 2 or 3 weeks. I think that traders are going to begin to focus once again on the numbers that we got out from the USDA in January, which showed very large U.S. and global ending stocks of wheat. To answer your question, yes, I do think it's going to be tested here in the days to come, and I wouldn't be surprised if, based on kind of the technical reaction following the report and the fundamentals of this market, if we were able to push lower below those lows on report day. And keep an eye out, we could have a lot of traders placing sell stop orders right below there. That's certainly an area, if you're long this market, you might want to get out once we started to make a move lower. So keep an eye on that here in the days to come. A big driver, though, of the market here in the remaining days of this week is going to be the export sales report. As we know, we had pretty good export sales last week reported. We'll have to see if it can continue here. Thanks a lot for joining us on GrainTV to wrap up the trade on a Wednesday. We'll see you tomorrow.